Using a small farm for tax write-offs can be a straightforward process. All the costs of operating a farm are deductible from income tax, including equipment and supplies, which are considered capital expenses. Examples of farm capital expenses include fertilizer, livestock feed, and lime. However, large investments such as purchasing a truck or tractor are considered capital assets and are not deductible. Labor expenses related to the farm are also deductible, and this can extend to covering home expenses if the home is located on the farm and is used for partial farm duties, such as administrative activities. Additionally, maintenance and repair expenses related to the farm are deductible, ranging from truck and tractor repairs to structural renovations. By considering these deductible expenses, individuals can simplify the process of using their small farm for tax write-offs.